consumers definitely see a gap when it comes to cross-border versus domestic. Consumer wants the same experience, but India wants domestic, you see transparency, you see cost, you see speed. But the moment when it comes to cross-border, all of that doesn't apply. So that's one of the things which obviously consumer is wanting to see. What's what's what has changed? What has changed and we are the hyper-connected. While penetration of most with smartphone penetration over 50%. Digital public infrastructure coming close to the small use cases, cross-border transfers where, like you rightly said, mostly banks and treasury, very few B2B, B2C or C2B or C2C transfers. And still today, that forms a very, very small portion of the global 150 trillion, going to 250 trillion by 2027. It's still sub 5% even in 2000, right? But the expectation in that piece has obviously, is much higher than what you see on. And this whole advent of this digital economy, and things like those, there's a huge movement there. And what we see is that all of these people are looking at newer ways, faster ways, cheaper ways, make sure that money is transferred to them on demand, not when your service provider thinks they can do it. So those are of things I think which is kind of shaping up the way the infrastructure is going. Regulators are they doing enough on the cross-border side? I think they're trying to now, having solved for the domestic pieces. What you see recently with NPCI tying up with
varied use cases across the world, right? And I think and some of the interesting use cases across Latin, Africa, APAC, and other markets that we're seeing specifically in the cross-border space have hinged on sort of concepts like stablecoin, etc. Why don't you talk to us about how use cases have evolved on the back of new age technologies and how that is going to impact cross-border infrastructure in the future, and do we see these use cases which today might be restricted to one particular geography, do we see them expanding and sort of making their presence felt globally?
I mean, I'm fortunate to have experience of seeing markets like Latin America and Africa. What I'm seeing there is very different from what I see in Asia. It's very much a growth in stablecoins, both for remittances into Latin America, payments into Latin America, and for payments cross-border intra-Africa. I was speaking to someone at Zoho about 9 months ago, something involving stablecoins. And he said their biggest use case now is remittances to Latin America. And the reason is that many Latin American countries that don't trust their own currency. They only want the USD. And it's very difficult to hold the actual USD. So what they're doing is they're buying stablecoin and they're asking their remitter in the US to send them stablecoin. And they usually send either Tether or Circle. They keep it in stablecoin, and then they find a way to download that stablecoin into their country that they need it. In other words, they're storing the value in USD. It's not depreciating in the way that the local peso is, and it's become a huge use case. In Africa, it's been very similar, very dominated by Tether, which is the biggest stablecoin in Africa. And you're seeing trade, payments, and most other needs increasingly being met by stablecoin. And this is partly because it's very difficult to buy something if you're in Ghana, to buy it from Nigeria. The exchange goes through USD anyway. And there's lots of restrictions, there's permissions, there's government regulations. So what the traders are doing is they're opening accounts on one of the major exchanges, which is predominantly Binance. And when they buy from a trader in Nigeria, they send them Tether. And it's instant. And the trader in Nigeria doesn't necessarily change that currency, the stablecoin in USD into Nigerian Naira. They keep it in USD because they find it much more functional for future payments. And it doesn't depreciate against the dollar. So this has become a very, very big use case in the global markets. Outside Asia, I don't see much going on in Asia. Increasingly in Europe, it's being used. It's now regulated. Regulation called MICA, M-I-C-A, which the stablecoin circle is already within. So they're not putting together CBDCs in these countries. They're going with the retail market, which is saying we want stablecoin. And particularly we want stablecoin in USD. 99% of stablecoins in the market are now in USD. Of course, there are euros, there are other denominations. And it's even gone as far as one stablecoin, the USDL, paying interest. So if you buy the USDL, which you can in certain countries where banking regulations don't prevent it, you not only have USD stored value, but you're also getting interest on your stablecoin. So I see huge growth at the moment in stablecoin usage outside Asia. I don't know whether it'll ever happen in Europe.
Thank you so much, Iain. Thanks for that perspective, Iain and Gaurav. In fact, maybe I'll move to you now, Gaurav, and I think this is probably also the right time to talk about regulations, right? And I think no payments disruption or innovation in any space, in any shape and form, be it domestic or cross-border, is shaped as much by regulation as it is probably by any other force. And a lot of the innovations we see have also been driven by regulations. Iain spoke about stable coins, for example, and a big concern around new tech and its usage in the cross-border space has been the regulatory sort of concerns. I spoke about, in the beginning, about the harmonization of regulatory efforts, but on the other side, the growing concerns around KYC, AML, cybersecurity. There have been massive data breaches. We've seen some big frauds happening on the cross-border side, even on the wholesale payment space, even in something as secure as the SWIFT infrastructure. We've seen large frauds, very recent one in Bangladesh, for example. So how do you see regulations really impacting this space, and do you see maybe innovations coming out because of the regulatory concerns, regulatory boundaries, and regulatory action? And in what extent will consumer expectations and regulatory forces eventually find a way to maybe converge?
Makes sense. Probably before answering the question, let me set context. The way you need to look at it is the kind of disruption Fintech has been able to create in the payment space. They've created new models, they've created probably new ways to move money, for example. What we are seeing right now is regulators across the globe probably trying to do a catching up game, where they realized that so many models have been created. It's important to figure out what's on the right side of the regulation and what's not. So hence you see a lot of policies, a lot of frameworks, a lot of regulations coming. And I think it's good for the industry asset, because it really gives you clarity in terms of where you spend your money to build. So that's probably from a context. Some trends which we continue to see. One, we will continue to see more scrutiny on, as you said, KYC, AML, compliance, and you will see fintechs spending a lot of money in building a tech solution which is compliant, probably automating a lot of processes, figuring out a way to do a real-time monitoring, so that probably stops some of the transactions which should ideally be stopped. So we'll continue to see that. We'll see a lot of innovation coming there. RegTech is a great example around it. Second, I would say a trend which you will continue to see is around data. Data protection and data safety is critical. Great example is GDPR. You will see more regulators coming up with similar policies and regulations around it. Again, you will see fintech spending a lot of time on cybersecurity, a lot of time on building a tech which is flexible to manage data of that individual or company in that country. So you see that as a trend. I think the third big trend, what you will see is, and again, lot of central banks are excited about it, they are piloting around it, is central bank digital currency. What eventually will happen is you will see more regulations coming in. Once that clarity comes in, probably it's going to bring another layer of disruption in B2B payments. You will see payments become faster, payments become cheaper, and multiple new models being built around that. I think these are three large trends which we see. Net from a customer view, it will become much simpler to collect the payment, it will become much cheaper to receive it, and it will become much faster. So hopefully it will improve your cash flows.
Thanks, Gaurav. I'll maybe now move to you, Nishikawa. We sort of live in a world of, at least in India, we live in a world of real-time payments. 300 million people today are active on UPI. We've seen peaks in Brazil and the way it has grown. Across Asia Pacific region, we've seen, SGQR plus pay now in Singapore. We've seen, Indonesia as a market, picking up real-time payments, etc. But that's largely been restricted to the domestic side. We touched upon that in the beginning. But one of the views that's very often propagated is that the future of cross-border payments also will eventually move very similar to the realms of real-time payments with interoperability amongst domestic networks, or maybe even a global mode of sending money across countries, be it wholesale or retail, that will really ride on real-time payment rails. So what is your view in terms of how real-time payments are going to shape the future of cross-border digital infrastructure, and will there be maybe a different path of evolution depending on the so-called developed world where real-time payments have seen lesser take-up, if I have to compare, like the country you live in, and the developing world like India and Brazil, where real-time payments have picked up steam much faster?
Thank you. Yes, I agree on this. And so I'm from Japan, but I'm now based in Japan. But recent 10 years I spent in ASEAN regions. So that's why I'm not sure the current Japan situation. So, but anyway, so I saw so many changes with the RTP. So the people, the consumers, very convenient to use, and also transfer money. That is that's very, very easy. So the maybe the 10 years back, we never seen, but recently, so many transactions happening in overall the age. So, but on the other hand, in the has developed country like Japan, I also still less than the RTP is not yet coming. Because I just very obviously we Japan already had some settlement payment system already, maybe 15 years back. So that's why, so that timing, that 15 years back, we don't have the internet, we don't have the cloud. Then, so that's why that timing is so that we are most best in class in system is there. But still we are using. Why? Because the enterprise and the consumer, the e-commerce site, every enterprise already adapted its current system. So that's why still the automatically the processing, even not directly cash moving, so but the process is ongoing. Like that. So that's why we in Japan case is also not so high demand from the consumer and marketplace. But anyway, the RTP and this kind of evolution is very, very convenient and more efficient to transfer money and pay something. It's also obviously. So that's why recently in Japan and in I try to connect to other countries, the domestic, the RTP scheme. Then to utilize more, make the cross-border transactions. Then also the overall the Japan situation is also the central bank is now have some plans to the CBDC. The CBDC is also kind of the RTP. Then they now the concerning about the once step in the RTP past or the CBDC is so much faster way. So they are now considering. Then so they are now collecting the information and so discussing very and also the something to make some consortium and so some project with some each other countries. In some cases, the BIS, the Bank for the International Settlement, and now in ASEAN region is the next project is ongoing. So that project is also Japan is so one of the observer is so now joining, and so how to maximize so these kind of cross-border payments please utilize the RTP. The problem now is also the current you mentioned because of the UPI and the PayNow is now already friend. But it is a bilateral scheme. That's why so if this scheme is a bilateral basis, it is also still ongoing, it is also not efficient way the overall the cross-border. That's why so this kind of the program is still there, and so developed country is also still not yet but I agree the real-time payment base is also very big contribute to make more cross-border payments and faster way, more efficient.
Thank you so much. Maybe I to you, Srini, now. I think we've spoken a lot about consumer payments, right? I think, but as I mentioned in the beginning, 140 out of 190 trillion of total cross-border payments is wholesale. So if I look at wholesale payment as a space, business-to-business payments, be it for micro, small, medium enterprises or large corporates, they have their own set of challenges, their own set of expectations. Right? So how do you see the B2B cross-border space being impacted in the years going ahead? And are there learnings from the consumer side of the story that are relevant to B2B payments as well?
Yes, thanks for the question. So basically, I'm actually mostly going to answer from a technology perspective. So basically, I'm actually IT side of things. Okay, so choosing the right technology, right infrastructure, and maintaining the resilience of your application is actually a major decision you make as a fintech company. So if you actually see the evolutions, the blockchain technology is being adopted more widely, and that actually offers various benefits, including decentralization of data and tamper-proof security and compliance. And if you actually also see it also provides additional automation capabilities, and you can actually also take this to unbanked populations, and as well as it reduces the cost of intermediaries is being neglected there. So blockchain is the right technology to choose, as well as actually, and you need to host your applications that are going to provide your innovative solutions on a right infrastructure as well. So when I say a right infrastructure, the public cloud is actually something on the rise. There are a lot of digital transformations happening over the cloud. Rightly, it offers a lot of capabilities, including redundancies, where you can actually move your data center itself into various regions. It offers there are a lot of data centers, various regions. Similarly, it also offers a lot of out-of-the-box services like AI, ML, and we are actually, as a technology company, we are paying more towards more tax towards security and compliance. So if that comes out of the box, then we should actually seamlessly able to actually take those out-of-the-box solutions and innovate in our own space. So that is more important in choosing the right technologies, and for which you need to build more IT resilience, wherein you need to use right tools which can actually ensure you meet your SLAs and you're failure tolerant, and you're able to actually bounce back when an incident, how fast you can actually able to recover from any problematic IT issues. So I see actually these three things are more critical in achieving successful transactions when it comes to cross-border.
Thanks. So maybe we'll sort of wrap it up with a quick 30 seconds from each of you on if you have to crystal gaze into the future and pick up the top 3 trends that you think are going to shape the future of payments, what would those be? Maybe I'll start with you, Iain, and go around the room and 30 seconds sound back from each of you.
I've given you my first point, which is stablecoins. I think CBDCs, or intergovernment payments, merchant payments in Asia, will become extremely big. And the third one is wallet is taken off in countries where you never thought it would happen. Just look at Kenya, Ghana, 95% of remittances into those countries are into wallet, and it's happening now in the Philippines and many other countries. So those are the three. First, stablecoin, second, perhaps CBDC in Asia, and thirdly is the massive proliferation of wallets globally.
Thanks.
I
Gaurav?
want to go first. Yeah,
Well, you can repeat what Iain said, that's fine. So then we'll all have a consensus that the same three trends is going to shape.
Probably, I think one is regulation. You will see more into that we bring that. You will see more regulations coming. You will, and I'm talking from a cross-border play. From a B2B side, I also believe that probably alternate stable coins. The third one is while we see PIX Brazil and we see UPI, which is not necessarily cross-border. Some part will see here.
So the try to spread out some service, but in the market, it also need more support. It need more take care of the buy and buy operations. That point is also the fintech. I also can be solved and can be support the overall the transaction. So that point is also my main view. And from the NPT perspective, it also we have it also providing some national security service. And also we are some providing service as that's why I also try to more expanding the overall those products.
From my perspective, I'll again go back to the consumer side. I think hyper-personalization and that combined with more use of AI to deliver not only products but also from a product perspective. Payments, whether it's cross-border or domestic, see more invisible that is what automated. And because consumers getting the same level of transparency, cost and speed, what they get on domestic side today, at least in some countries.
Thank you so much to all my fellow panelists for your perspective. I think we sort of touched upon multiple areas across regulations, across innovations, technology, security concerns, so on and so forth. But I think we can all agree that this is a space ripe for disruption, and in the years to come, if we're sitting here 10 years from now, we'll probably be talking about a very different set of priorities and a very different cross-border landscape than what we have. On that note, we'd love to take some questions from the audience. On that note, we'll wrap up. And if there's any other question, we will see you. Thank you so much for being of the audience, and thank you.